Turkey's Citizenship by Investment program has long been considered one of the most accessible and appealing options for those seeking a second passport. In recent years, it's attracted enormous global interest, with estimates suggesting anywhere from 50,000 to 500,000 investors may have obtained Turkish citizenship, primarily through real estate acquisitions or substantial bank deposits. The requirements have been straightforward. Invest $400,000 in property, or deposit $500,000 in a Turkish bank for at least 3 years. Welcome back to the Liberty Mundo channel, where we help high net worth individuals protect their assets, secure multiple citizenships, and legally minimize taxes. Visit libertymundo.com and get in touch for personalized strategies. Now the landscape is shifting dramatically. As of August 23, 2025, the Turkish government has ended its foreign exchange protected deposit program. This program was a key selling point, giving investors who deposited $500,000 protection against the notorious volatility of the Turkish lira. Essentially, it meant that after 3 years, regardless of what happened to the currency, you would get your original dollar amount back. That guarantee is now gone, and with it, a huge measure of security for investors considering the bank deposit option. To put the risk into perspective, the Turkish lira has already lost about 21% of its value in the past year alone. Even optimistic projections now warn of potential losses of 30 to 50% in the next few years. More pessimistic forecasts predict the lira could lose up to 70% of its value, effectively meaning that the original $500,000 deposit could shrink to as little as $150,000 after 3 years. What was previously a reliable, almost risk-free route to citizenship has become an option fraught with financial uncertainty. Legal risks compound the situation. Turkish citizenship laws, specifically Article 40, say citizenship can be revoked if the original legal requirements were not met at the time of approval. If funds are withdrawn before the 3-year period is up, banks are obliged to notify authorities. For applicants whose citizenship applications are still pending, early withdrawal most likely means immediate cancellation of their application. Even those who have already secured citizenship can face revocation if the terms were breached. And with processing times often stretching well beyond a year, this creates a long period of uncertainty for investors who are currently in the middle of the process. Turning to the real estate route, while it sidesteps the lira's volatility, it introduces its own set of challenges. The Turkish property market, especially in popular cities like Istanbul, is riddled with pitfalls. There are widespread reports of overpriced properties targeted at foreigners and outright scams. Investors face a market where property prices have climbed in lira terms, but the currency's weakness means those gains don't always translate when converted back into dollars. As a result, the citizenship goal can come at the cost of a poor financial investment unless buyers exercise extreme caution and hire trusted local professionals. Political turbulence is also shaking up the outlook for Turkey's citizenship program. The IYI Party, also known as the Good Party, has launched a legal challenge aiming to cancel many of the citizenships granted through investment. They claim that over 500,000 passports have been issued in recent years and argue that many should be annulled because they violate constitutional or legal norms. The opposition has even called for a ban on property purchases by foreign nationals and for the entire investment-based citizenship program to be scrapped. While a mass cancellation of passports remains unlikely, the political momentum suggests tighter rules or restrictions are possible in the near future. This could mean even longer investment holding periods, higher minimum investment thresholds, and much stricter background checks. Looking to the future, it's clear that Turkey's citizenship program is under intense pressure from multiple directions. The government relies on the program for significant revenue, but faces growing public backlash at home and mounting suspicion from abroad. In response, it's likely that the program will see a raft of changes aimed at increasing transparency and due diligence, making it harder and more expensive for foreign investors to qualify. This is similar to what's already happened in Caribbean countries that tightened their own rules after pushback regarding Schengen zone access. For prospective investors, the once promising bank deposit option is now not worth considering due to the heightened currency risk. The real estate route remains open, but comes with its own risks and requires significant local expertise. Given these changes, savvy individuals would be wise to explore alternative programs in jurisdictions with solid reputations, political stability, and a proven track record. Ultimately, the Turkish Citizenship by Investment program is no longer the quick and easy solution it once was. It now demands careful due diligence, the willingness to accept considerable financial and legal risk, and the patience to navigate an evolving regulatory environment. Anyone considering a second citizenship should focus not only on upfront costs, but on the overall stability, safety, and long-term value of the program. As the Turkish experience demonstrates, the investment migration landscape can change overnight, making professional advice and thorough research absolutely essential. If you want to reduce your taxes to single digits, make your assets impossible for anyone to touch, and gain more freedom with second citizenships, get in touch with Liberty Mundo and book a consultation call. We will help you develop a complete blueprint to organize your life to safeguard your wealth and your freedom. Follow the link in the description for more details. Thanks for watching, and see you in the next one.